And a man whose advice can have a direct impact on prices is Jeff Currie. He's head of commodities research at Goldman Sachs International, and he's here with us now in the studio. Jeff, great to have you on the show. I mean, not a day goes by without us not talking about commodities. It seems that they can do no wrong. They have this huge, demand from China. China continues to grow, but at the same time, they're so impacted by currencies. How do you see this panning out?
Well, I think it's important to distinguish between the different types of commodities. Gold, we like to call it the currency of last resort. So it's pricing pretty much the same thing the U.S. dollar is, in the sense right now it's pricing debasement. As we print money, we debase the currency, which puts downward pressure on real interest rates and puts upward pressure on the price of gold. And in a sense, one way we like to think about it is the opportunity cost of holding gold has declined tremendously in the current environment, and as a result, investors bid up the price of gold. One of our clients put it more recently, I think, is spot on. You got two options in this world right now. You're either long gold or you're long politicians. I say that a little tongue-in-cheek, but in reality, gold is a very good hedge against the current risk of debasement.
But if you look, Jeff, at things like copper, they've had such an amazing run, and it seems that they'll continue to increase. Are we in a super cycle?
Well, to answer that question about the super cycle, I think it's important to take a step back and ask, what did the commodity story look like a decade ago? Because there, the commodity story was pretty much the same across every single commodity. It was pretty simple to tell. Due to decades of underinvestment and the ability to produce these commodities against strong demand growth from the ASEAN countries, and believe it or not, North America was a growth center back then, this was going to put upward pressure on commodity prices, rise company returns above the cost of capital, and capital would just flow into the sector. We would increase supply, and by 2010, commodity prices would be back down. Well, here we are, a decade out into the super cycle, and it's 2010. Is the world a different place? The answer is absolutely yes. We did solve the problem in many different commodities, particularly like natural gas. I like to say, don't bet against an engineer. Give them enough time and money, they will solve the problem. They did in natural gas, nickel, aluminum, and many different other commodities. However, there are a select few commodities that still have a significant supply side story left to them. It was really an issue of access. And in terms of thinking about those markets, it would be crude, copper, corn, and platinum.
Jeff, on a lot of these commodities, though, that are so linked with China, is there a risk that they will actually fall off a cliff when China's growth will stall? I mean, is there a risk that we're in a bubble in any of these commodities?
Well, I think, again, it's important to distinguish the different commodities. I like to say energy is still much more leveraged to the United States, while base metals are much more leveraged to China. And in terms of thinking about a slowdown in China or the rest of the emerging markets, the base metals complex is clearly the one that's most exposed to that.
So what would you be buying right now? I mean, you say, long on gold or long on politicians. So gold is one of your top pick. What else?
The way I like to remember it is back to the USSR. CCCP. Crude, copper, corn, and platinum, because those are the markets that are still very significantly supply constrained and the ones very much leveraged to the emerging markets.
And what are the two or three commodities that actually you'd stay away from because, well, they may burst and, a bubble may burst and actually they don't represent that good value?
I think going back to the point that where we have seen the problem solved in the different commodities, again, natural gas is the one with the advent of the shale natural gas revolution, significantly oversupplied. The other one I'd stay away from is aluminum.
Jeff, great to have you on the show. Thank you so much for coming in.